Welcome to the Innovation Conversation, a podcast about innovators, both in business and real life. Hosted by myself, Ricardo Pascual, and Harry McDonough. Today's episode is sponsored by Hyperskill. Hyperskill is a learning and training platform that enables people from all over the world to learn new tech skills. If you're looking to learn new tech skills, this is a platform to choose. You can find out more about them on hyperskill.org. Today we are joined by Callum Woodcock from WineFi. Hi, and welcome to another episode of the Innovation Conversation. Today we are joined by Callum Woodcock from WineFi. Callum, welcome.
Thank you, Ricardo. It's a pleasure to be here.
It's a pleasure having you here. So tell us all about WineFi. I'm quite curious about it. I'm a big wine fan myself. So what does your platform do?
Yeah, great question. So WineFi is a next generation platform specifically for investing in fine wine. The idea being that you as an individual can create a basket of wines that we manage for you from sourcing all the way through to sale, or intermediary platforms or institutional investors can create managed portfolios through us. We have an expert investment committee that chooses the assets, which includes 2 professional wine investors and 2 masters of wine. And the basic idea behind the platform is that we take what has been previously a very opaque, complicated experience and really make it as easy as placing a trade on Robinhood or eToro, to use an imperfect analogy.
Interesting. So how does it actually work? So I know that, for example, when you're buying a stock, it's highly regulated. How does this compare to buying a stock?
Yeah, it's a great question. So I think there are some similarities between fine wine and stocks. In the simple sense that when you're investing in an actively managed fund, or if you're choosing your own portfolio from stocks, you're looking at various different factors. So, for equities, it might be something like the leadership team that's in place, how they're performing, their revenue targets, whether they're in a sector that's growing. And for wine, it's very similar, apart from you're looking at factors that relate to the producer, the vintage. The price is very important, because you can buy very overpriced assets that aren't going to appreciate much, or you can buy assets that have been misvalued by the market. And then just in terms of how you would go about buying them, there are some differences in that there are channels open to the wine trade and trade buyers that aren't open to individual investors. And I think this is what has historically led to the disconnect between individuals who are looking to invest in wine and the kind of wine merchants, wine brokers who have a real informational asymmetry, because they can understand what the market is for that particular wine in a much deeper and more accurate way than the individual investor can. And the other thing, you mentioned equities being heavily regulated. Wine in and of itself is not a regulated asset. When you put it in certain vehicles, that starts to become a regulated activity. So it starts to look like a collective investment scheme if you're pooling investor funds, or you're creating a bona fide wine fund. But wine in and of itself is not regulated. And I'm afraid to say that it's attracted a few perhaps shadier players to the market over the years.
Interesting. And how is this wine kept? Is it still in the barrels or bottles? How does that work?
Sure. So it varies, but typically the assets that we will be buying are what's called in bond. So in bond just means stored in a UK government bonded warehouse. The UK, for strange historic reasons, is the centre of the global wine trade, mainly because wine from France, Italy, Germany, Spain, etc. would flow into the UK
Portugal,
before.
Right? That's...
Or Portugal.
Yeah, they mentioned Portugal there in that whole story.
Exactly. We can't neglect Portuguese wine. But yes, historically that wine would flow into the UK prior to flowing out to the US and overseas. So the UK has this fantastic system of bonded warehouses. Now, the reason that you have to store the wine in bond, as it goes, and the reason that we will only purchase wine either direct from producer or that has been stored in bond, is kind of threefold. So firstly, VAT and duty is considered suspended until those assets leave bond. They're almost like free ports in and of themselves. So you can import the wine from France or Italy or wherever you're importing it from without paying the lovely import duties that we have since given ourselves by leaving the European Union. And secondly, because these warehouses are specifically designed to keep the assets in perfect condition. So you have examples like London City Bond or Wiltshire or Coterie Vaults, which are all warehouses where temperature, light, humidity and vibration are carefully controlled. So the wine, a future buyer knows that wine has been kept in perfect condition. Taking wine out of bond is a bit like buying an action figure and taking it out of the package and then trying to resell it on, but for adult wine drinkers. And then the final reason that you have to buy in bond is the moment that wine leaves the warehouse, it effectively disappears from the view of the market, which is where there is no longer a comparison with equities, or publicly traded equities at least. So what does that mean? Well, firstly, no one knows how it's been stored. So you don't know whether you're buying wine that's in great physical condition or that has been in someone's kitchen cupboard for a few years, just at completely the wrong temperature. But the other problem is, of course, wine forgery. And I think people often underestimate how much of a problem this is in a market like the fine wine space. And like any luxury goods, so, fake watches, for example, there is a whole industry built around counterfeit assets. And by some estimates, around 20% of wine in circulation on the open market, so not stored in bond, in circulation on the open market, is fake. So there's a great Netflix documentary that your listeners may have seen or be interested in watching called Sour Grapes, which explores this in detail. But it's a major issue. So when you buy wine in bond, you know typically that it has perfect provenance. So it's gone straight from the producer into bond, and then it's moved around or changed hands multiple times within bond. It's a wordy explanation, but I hope that made sense.
No, it makes sense because there's a lot of fake goods that we keep on buying without even realizing. You mentioned wine, but also olive oil is quite in the news nowadays because there's been a lack of production. Honey is the same thing. We're actually buying honey. I think the biggest exporter of honey is Singapore, if I'm not mistaken. The reason being is that everyone from China just produces honey made out of rice and then puts it in Singapore, and then Singapore has this ridiculous amount of exports, but actually it doesn't make any sense because they don't have that many bees. So yeah, it's a big issue.
That's one of the most interesting but perhaps niche facts I think I've ever heard on a podcast. So
sorry about that.
No, I remember that. Thank you.
But you're saying about the wine and how so everything is controlled. So we actually know the wine came from the producer. We know it has been kept in perfect storage conditions, and we know that it should, in theory, hold on to its value for a long, long time.
It's exactly that, and I think a lot of people, because wine is a passion asset like watch collecting or art collecting or classic car collecting, and I think a lot of people conflate collecting, which is for pleasure, with investing, which is ultimately for anticipated financial gain. And the clear distinction between the two, in my mind, is whether or not you're storing them in bond or you're storing them somewhere you can display them at home and, talk about them and gift them to friends or whatever.
Yeah. And how does the wine, so obviously wine, there's different types of wines and all these wines have different maturity. So some are to be consumed within, 5 years. Others can actually last for a lifetime and then more. Does the wine as an asset mature by a certain date? Like you buy, a wine and then you expect it to sell within 5 years? How does that work?
Yeah, so a lot of it has to do with the type of wine. Red wine, for example, would typically last longer than white wine. Fortified wines would typically last longer than the normal red wine. So, what you need to look at really is the wine's drinking window. Now, this is often an estimate provided by a professional wine critic. And the trick when it comes to wine investment is to buy the wines relatively early into their drinking windows or relatively young wines that have not yet entered their drinking windows and hold them for as long as you can within reason, because eventually those wines will hit peak maturity. They will be very attractive to someone who wants to purchase them in order to drink them because they will be at their very best. And at the same time, the number of that wine and that vintage on the market will have declined quite substantially. So we're talking about producers, so the vineyards or the chateaus themselves, who have a limited supply in every vintage anyway. So let's say, Chateau Haut-Brion with 12,000 cases in a vintage, for example. Over time, some people won't wait for them to enter their drinking window, so they'll be consumed young. But also, bottles are, damaged. They are improperly stored. They are consumed once they reach their drinking window. So the longer that you hold the assets, the fewer of them exist, less of them exist on the market, basically. So that's the basic idea behind wine investing. So you really want to hold as an investor as long as you can into that drinking window, up into the demand curve.
And can you sell that as an asset to, let's say you need to liquidate some of the assets? Is that possible?
Yeah, absolutely. So, we trade cases of wine all of the time. It's a relatively illiquid market, but it's not as illiquid as, for example, the market for companies or even for property in some cases. So it is possible to sell wines on the open market, either to private buyers, to merchants, hospitality venues, whoever it might be. But if you want to get the best possible price, then you don't want to have an incentivized sale. So you don't want to sell, overnight if you can avoid it, because someone will say, okay, yeah, sure, I'll take those assets from you, but you're going to pay a discount. So you want to broker them slowly into the market.
Callum, how did you get started in all this? So, because you're still a startup, but at the same time, you're quite a mature company. So how did this idea come about?
Sure. I think we're still firmly a startup, but I think we're mature in a lot of our processes and in our selection criteria, mainly thanks to the strength of our investment committee and the people that we have involved. But yeah, from my perspective, I started my career in asset management. So I worked first at Fidelity and then at JP Morgan. So I always had this nerdy interest in investing. But at the same time, my fiance's family are deep in the wine trade. Her father was at one point overseeing a major UK importer. He then went on to become the CEO of an English sparkling wine company, and was always aware as a result of wine as a collectible, but also as an investment. Yeah. And I found the latter really fascinating. And I'm ashamed to say it's where I started my journey into wine, really. I started looking at it as an asset versus a consumable, which upsets everybody in the trade and who sees themselves as a connoisseur, as you can imagine. I'll caveat this by saying I have since gone on to become very passionate about the underlying disclaimer, etc. But fine wine basically has this incredible investment profile where the two mainstream wine indices, for example, which are produced by this fantastic company called the LiveX, who have done a lot to professionalize the space, have broadly outperformed most mainstream equity indices over a long time horizon. It performs similarly to the S&P, and it is uncorrelated to other assets. So it shows no correlation to traditional equities, but very little correlation to commodities or bonds, etc. So it's a really interesting diversifier. And at the same time, because as we've already discussed, it's illiquid, it's also very unvolatile. So it behaves, it's a risk saying this, but it has a stability a lot like government bonds. And it's a safe haven asset, so it behaves a bit like gold in that sense. And in certain jurisdictions, under certain circumstances, it's also exempt from capital gains tax. So I was aware that wine had this fascinating investment profile, and I found that my own experience trying to invest in wine, when I first had a little bit of money to allocate, was very substandard versus what I'd seen from professional asset managers, like not just JP Morgan, but also their clients. So I was selling to intermediaries and distribution partners. And I thought, it's such an interesting asset class. There's a real opportunity here to bring this asset class mainstream. And then the more that I spoke to my client base at JP Morgan, after I'd left, I went to work at an early stage startup. The more I realized that there was interest from this really broad audience of sophisticated investors in structured wine investment products. So not just owning the wines outright themselves, but also investing in, closed-ended vehicles with a certain time horizon. So we hold the wine for 5 years or whatever. And I think that's really exciting because it represents a huge opportunity, not just for investors to gain access to wine through a reputable company that is adhering to the highest possible standards in asset management, but I think it represents an incredible opportunity for everyone connected to the wine ecosystem, whether that's the wine trade, the wine merchants, storage companies, but also the producers, because it brings this new audience of people who have first discovered wine as an investment and then may well go on to become interested in the underlying assets as a consumable, in the similar way that you might invest in an art fund and then think, oh, okay, I'm holding 2% of an Andy Warhol painting. I'm going to get a reproduction of this painting or whatever, or I'm going to learn more about the artist. It's that kind of journey. So my hope is that WineFi's presence in the market will benefit everyone. And I think we've been very lucky that seems to be how the market regards us so far.
Is there a difference? Because coming from Portugal, I tend to know a thing or two about corks, right? I actually went to the cork museum. I know exactly what a good cork looks like, what a bad cork looks like. But I also know how impactful that is into actually the storage of wine and making sure the wine doesn't turn into vinegar. So
Yep.
when the producers are producing this wine and it goes into ponds and storage and becomes an investment vehicle, do you have them change some of the elements of the actual physical bottle or something like that, or it's just a very straightforward bottle that actually anyone can buy, but that just so happens to go into storage?
Sure. So the bottle won't change unless there is something wrong with the wine itself. People take it very seriously. They often get sent back to the producer for recorking, especially for old and rare wines. Typically, the wines that we're investing in are not, these ancient wines that have been improperly stored that need that kind of attention. But in the event, for example, an original wooden case was slightly damaged, that is the kind of thing that would be repaired. Yes.
Interesting. And
Yep.
okay, this is because the wine is such a fascinating topic. But in terms of your business and your idea, did you get any external funding? Was it hard to get it off the ground? How did you just put all your money into it? How did it come about?
The money was already in wine. No, so was it hard to? We did raise funding, so we raised a pre-seed round that we wrapped up in October last year. So we raised just under $500,000. We were very lucky to get both funds and a bunch of really, really interesting and useful, knowledgeable angel investors on board. I'm giving them way too many compliments because they're probably listening to this podcast. But we raised through SFC Capital, Founders Capital, and then we had a number of angels as well, including some quite high-profile figures like the incoming chairman of Inchcape, and really interestingly, figures from across the wine trade, which is great because it shows that there's a degree of interest from the trade, but also from the finance world. So we had, I think, VPs from Fidelity, BlackRock, JP Morgan, T. Rowe Price, and a hedge fund as well, who all participated because they wanted access to the asset class in a structured vehicle. And some of those have gone on to become our early customers, our early investors, because they saw us as solving a problem that they knew existed for themselves, which is kind of the best way of raising. And if I'm being very cynical, we raised at the worst time of year. I was fundraising in August in 2023, so during the summer of the worst year.
That is
a lot of out of offices. But no, I think I was quite lucky, if I'm being cynical, that rich people like wine. So it's something that appeals to angel investors because they have an existing interest in the space.
But so what's the plan for your company? I mean, you told me that the UK is where you want to operate. Is there any other geography you can operate out of that has the same conditions? Or the plan is just, let's concentrate everything in UK and work from here because there's actually quite a lot of protection and there is an ecosystem that supports what we're doing?
Yeah, that's a great question. I think in terms of where the assets are stored, it has to be the UK assets. The wine, ideally, you don't move it too much. We do import from the US, so from Napa, because we see that as an investment grade region. But increasingly through a new storage partnership, we are going to be storing in the US as well. I think initially we are focused on the UK, but we already have European clients. We're partnering with European distribution partners and a platform in Singapore that wants to offer wine as a basket of alternative assets to its customers. So we are almost global from day one, but what I want to make sure that we do is centralize our operations in the UK. And it's very interesting because when we're looking at expanding to the United States or to Australia or to mainland Europe, when you're looking at a concept like this, so much innovation comes out of the US. But I think because of the central role that the UK still plays in that global landscape, that for this concept to take off, it has to be done by a UK business as opposed to an American business, which is an interesting moat because they're almost too far down the supply chain in some circumstances.
I guess it makes sense because, wine purists can be a bit, how should I put this? They can stick to their colors, right? Especially when you're comparing European wines with American wines. There's a big fight there saying, they shouldn't even exist. But in reality, they actually have quite a lot of decent wines. So
Yeah, exactly. No, well, the Americans produce fantastic wines. Napa Valley is extraordinary. Your listeners might be familiar with the Judgment of Paris, which was basically a blind tasting between American and French
72 was
wines.
it 72 where they had
Yeah, something. Yeah, it was 1970s.
there's the movie
72,
about it.
76.
Trying to remember the actor, but it's actually on Amazon right now in the UK. You can actually watch that. It's a really good movie.
Oh, nice. Well, shout out. There you go.
It's Chris Pine, the guy from Star Trek, is actually there because he plays a role there. So it's a great movie.
Yeah, that's it. But just for your listeners' benefit, if they're not familiar with the story, so wine connoisseurs, shall we say, we won't call them snobs, are typically very attached to old world wines. There's a lot of history and a lot of allure of old world, the classic French wines, the classic Italian wines with these lengthy histories behind them. And yet there is a fantastic culture of innovation and winemaking, not just in the US, but Australia, New Zealand, Chile, Argentina, South Africa. And Napa Valley wines really exploded onto the scene because of this blind tasting that was set up by a chap called Stephen Spurrier, who basically took a bunch of Napa Cabernet Sauvignons and a bunch of top French Cabernet Sauvignons and put them side by side in a blind tasting and then a tasting where the wine critics knew what they were tasting. And interestingly, in the blind tasting, the US wines wiped the floor with the French wines, and the other way around was true when they knew what they were tasting. Mm-hmm. And because of the objectivity of a blind tasting, it really put Napa Valley wines on the map. So it's a great story. And as you say, the film, I can't remember what the film is called now, is it?
I don't remember the name, but I remember the story so well because it's a really funny story when you put it in film, right? So people just go naturally attracted to it. It's a bit like the whole Coca-Cola and Pepsi test that they did, I think, in the 80s, where the same principle, blind testing, two glasses, one's Coke, the other one's Pepsi, and I think everyone kind of went for the Pepsi.
Yes.
Here you go. The choice of the new generation. That's it. Pepsi. So,
but it goes to show the because the later part of that story with Coke and Pepsi is that Coke changed their recipe to be sweeter and more Pepsi-like, and people hated it because they were buying Coke for the brand as opposed to just for the taste, which goes to show the power of branding. So it kind of tells both sides of that story, in a very elegant way.
It's funny because we're talking about wine and all that, but for example, champagne. Champagne can only be called champagne if it comes from Champagne in France. However, you can get very, very good sparkling wine from everywhere in the world. It actually tastes just as good or even better sometimes. But you cannot call it champagne.
And that's a major factor because it's about preserving the quality as well and preventing someone from sneaking in under the radar with a bad quality wine and trying to pass it off as champagne. But yeah, you're right. I mean, English sparkling wine doesn't quite roll off the tongue like champagne does, I suppose.
No, and it's good. I think you're going to struggle to try and sell any sparkling wine from England to anyone in France.
You almost certainly would struggle to sell it to the French. However, I have to say this because my father-in-law runs an English sparkling wine company. It's a really interesting industry in the UK because, one, the quality is excellent, so there's a lot of really premium sparkling wines coming out, but also because of climate change, the temperature is moving north. So the south coast of England, so Sussex, for example, where a lot of these English sparkling wine, the vineyards are located, are basically where champagne was 10, 15, 20 years ago. Yes. And it would be interesting to see the impact that climate change has on not just the wine producers, but also on investment grade wine in general, because you'd think if there was ever to be a significant climate shift, then certain wines will be prized above others from certain producers because they were from a better time. And that's basically how vintages work anyway. So food for thought.
It's quite interesting because I don't know how much people know about this, but climate greatly influences wine. It's not just about the soil or the type of grape. It's also about the climate and the region you're growing the wine in. So when that changes, things dramatically change, right? And it's so fun to think about it that way, because I think we're going to end up with a lot of regions that we don't think necessarily produce good wine right now, producing amazing wines in the future. And then the ones that were traditionally produced really, really good wine are just going to have either a drop in production or they need to change grape types or something just to make sure the quality is as high as before.
Yeah, I think you're completely right. And the other interesting factor then that comes into it, as we've already touched on, is brand. So Chilean wine, for example, is fantastic. But if you walk into a supermarket, it will be typically priced right at the lower end of any wines available, because in the minds of consumers, it's a lower quality wine. Whether or not that's the case, it's a matter of branding and having to invest in those brands in order to build up that reputation. And, top French wines, the Bordeaux First Growths have this history going back hundreds of years. They have their own classification from 1855 from a French emperor. It's difficult to catch up with that sort of head start. So it'll be interesting to see how other producers approach it.
It's a fascinating market because anything related to alcohol, and especially like this type of complicated alcohol production, it's a lot of the branding that's evolved and a lot of the history. But in reality, when you start tasting it blindly, you probably will prefer something new instead of the old ones, right? It does happen quite often. In terms of like the business side of things.
Yeah, sorry, we got carried away there.
No, because I could talk about this, for hours. What was the worst day you had in your company? So
the worst day. And the reason I'm asking this question is, for people listening in, I mean, it's great because you have a background in finance, so you come into this new world, but you knew exactly what you're doing in terms of how to make your company attractive. But what was that day you just said, I might actually quit? Yeah, sure.
Everything went kind of tits up. Can I say tits up on a podcast? Probably. So, yeah.
Yeah. So in all honesty, I don't think there's ever been a day where I've thought about quitting. But there have been many very rough days, as you can imagine. I think, it's part and parcel of building a startup in some ways, especially an early stage startup. I was listening to an Alex Hormozy podcast the other day, and either he or his guest compared building a startup to being like constantly punched in the face. And I thought, yes, that's like the exact analogy. I think in terms of the lowest point, it was actually probably during the fundraising process. So once we launched, we started seeing traction and revenue straight away, which was great, even before our platform was in private beta. So literally we were holding the assets, keeping our clients updated via email, very low tech way of doing it. We now have a nice shiny platform that we're iterating on. But I'd got halfway through this funding round and I'd raised through ASAs. I knew how much we needed to raise in order to hit certain targets. So an ASA is just the catch-all term for like the Y Combinator SAFE. So basically you get paid by the investor in the business in advance of a priced round. So you've taken investment on board, but the valuation, etc., isn't decided. So I had basically raised about half of the money that I needed to start the company and to make the hires that I wanted to hire and hit the targets that I wanted to hit. And I had quite a lucky time, I think. At the beginning, a lot of investors had come on board because they liked the idea. I'd brought a semi-fund on board. I brought a load of angels on board, and I was like, oh, great. And I was kind of betting the second half of this round on this one investor. And if I'm totally honest, I think I'd slightly slacked off the fundraising as a result. Things were looking really positive. And they decided not to move ahead, or they weren't able to move ahead in the timeframes that I wanted them to. And that slightly left me in the lurch because I basically thought I've wasted 2 weeks or whatever going through this process when I could have set up a load of conversations with angels who might have been investing smaller amounts, but it would have made up that shortfall.
Yeah.
And then the concerning bit where I was thinking, how am I going to turn this back around is I was going full time. I'd already handed in my notice and I was thinking, okay, we're going to have to, wrap this round up really quickly. And we were lucky that a lot of our angels knew people who were keen to invest, and we had some great people on board, and we ended up closing the exact amount that we wanted to raise, which was a relief. But because it was my first time raising, this is maybe a bit too transparent, but I was sitting there going, okay, what now? And it's something that I've now got such distance on, so I could look at myself now and I was like, well, it's obvious, that if X number of people were going to invest in you, then you're going to be able to close X remaining number of people. In the same way that if you can get your first 5 customers, you can get your next 5. It's that kind of way of thinking. But at the time, I remember thinking that it was a major hurdle to get over as a business.
Okay, so the question then becomes, what advice would you give to someone just about to start their fundraising journey?
So I think, okay, actually, there's a few. That's a really good question. There were a few things that everyone told me, and I had slightly ignored at the beginning because you have to go through the pain of making your own mistakes.
Yeah.
The first thing is make sure that the deck that you've got is really clear and tells an interesting story. Mm-hmm. That seems really obvious, but I see a number of bad decks myself. Some where I finish it and I can't work out what the concept really is, or I can't understand the revenue opportunity, all of those kind of things. And I think that needs to be really clear. And throughout the fundraising process, we had about 24 iterations of our pitch deck because we were really trying to, really convey that. And then you have a call with an investor or you get some feedback and they say, well, I didn't understand this, or I'm passing for this reason, or I liked it for this reason. And you go back and you change the deck a bit to really lean into that comment. So I think that's important. Be clear on your idea, and then be clearly able to convey it. I think the second thing is making sure that you do market research in advance. I actually think we did do that very well. So we spoke to a lot of our target clients across several different markets. Our three kind of different revenue streams, and so we had a really clear on what each segment wanted or didn't want. And we were then able to talk with conviction when we were fundraising because, an investor would push back on a point and we could say, oh, that's interesting because we've had 50 user interviews and this is the theme that has emerged there. And you can back up your claims with data. And I think inevitably founders are idealistic in many ways. And I think that data, it really changed the way that we approached one part of the market, which we otherwise would have got completely wrong. So I think, make sure the deck is super clear and tells a story and that it's enjoyable to read. Then make sure that you have the data to back up your points. And then I think approaching it like a sales process is good. And I've noticed a bit of a discrepancy between how angel investors on LinkedIn or some angel investors on LinkedIn talk about this versus founders. Because if you're a founder with a network, obviously the best way of getting started is to reach out to a few people who are going to pass your bullet point summary and your deck onto angels that they know. But if you haven't got a network, then how do you get in front of those people? Because you need to reach out to angels cold. You're going to maybe speak to accelerators who are going to want part of your company. There are way fewer options open to you. And I've noticed a few angel investors who have angel investor on their LinkedIn as a title complain about receiving cold pitch decks from clients, which I've found fair enough if you're not an angel investor or you're not publicizing that you're an angel investor. But I think you can't have that on your LinkedIn and then complain when people send you angel investments. So I reached out. I didn't actually have a huge network. I had a lot of people that I knew who worked in finance who were able to put who wanted to put money in, which was very flattering. But it was a few core angel investors and people that I had a relationship with previously, or an existing relationship with, who sent it on to a few friends. One of them would invest, and then they would send it on to a few more friends. So I think that's the way of doing it. That's the way to do it if you can. But people often say outreach doesn't work, cold outreach doesn't work, and we had a few tickets from reaching out cold. And then the final point, sorry, this answer is dragged. The final point that I really found and completely ignored when I was fundraising was starting with the easy quote unquote conversations. So start with individual angels. Don't start by going to funds or, even if they're like SEIS or early stage funds, start by going to the easy conversations, working out what's resonating about your pitch and what's not. And I think because my background was in sales and, I'm from a kind of commercial background, I thought, I'll be fine. And I wasn't fine. The first few conversations I had with funds absolutely crashed and burned. So I was humbled very quickly by that.
I can imagine, because that's the same background I have, is also sales. And you always walk in thinking, I got this. But in reality, once you start tossing a few curveballs,
exactly.
Maybe I don't. Maybe I need to go back to the drawing room and kind of make a better plan. So that happens quite often. Would you say that it is hard overall to fundraise? right? Because this is your first startup, right?
Yeah.
So do you think the whole process is hard, or it's you kind of make your way across it, so or improvise it along the way?
Yeah. So it's interesting because now I've got the benefit of hindsight. I was leaning towards saying, "Oh, it's not, just stay determined." But that's exactly what, when you're listening to a multi-millionaire, successful business person on a podcast or whatever, which I'm not, by the way, I'm just using that as an example. And they say, "Oh, anyone can do it. It's just grit." Well, it's easy for them to say because they've already done it. But if I put myself in my shoes when I was fundraising, there were so many highs and lows, and those lows are really amplified by the fact it's your idea, it's your baby, you're the only one carrying it. And I had to constantly remind myself that these were people who were objectively trying to assess a business opportunity. But because at the pre-seed level, there's some validation there, but not much. Yeah. It ultimately comes down to their belief in the founding team and the founder. So it's very easy to take things personally if someone decides to pass on an opportunity. And I think that's the hard bit. I think there's a lot of capital out there chasing too few opportunities, good opportunities. But I think as a founder, you go on an emotional roller coaster to a degree, especially when you're raising your first round. I will be approaching our seed round very differently if we choose to raise one.
So,
sorry.
On that note, I was just about to ask you, how do you deal with that low, right? Because it's going to happen, right? You're going to get home or finish a Skype call. No one's used Skype, a video call with someone, and just going to feel absolutely horrible. So how do you manage that? How do you get back on your feet after being tossed the biggest curveball in your life? So how do you manage that?
So a good question. The thing that I felt very lucky, as a solo founder, to have was a load of mentors who are not necessarily invested in the business, but were personally invested in me, and thought it was a good concept, thought I was the person to do it, and who were willing to offer advice and almost basically reassurance that this was the path to go, that this is what we should be doing, that we had to just keep persevering. As I said, I never, for a moment thought that we wouldn't be able to fundraise, or this concept was one that I shouldn't be working on. Mm-hmm. But it certainly can be difficult to, face rejection. And especially if you have a few no's in a row. I ended up just there was 1 week where, the big backer that we were talking to said no, and then a variety of other smaller ones did. And I was like, this is hell week for me. But you just have to, you do have to persevere. And I think ultimately, if you don't back your idea, and this is where market research is so important, because if I hadn't done that market research, I wonder whether I would have persevered to the same degree that I had, because that would have just been on basically gut feel. And, this is a problem I think exists, as opposed to this is a problem that I know exists for this many people who are going to be my first customers or my first investors. So, it's a good question. But I think, that conviction in your idea, and then having people to talk to about it to kind of reassure you're on the right path was at least very important for me. I can't speak for everyone, but
so now that we have, we kind of went through what the company does, your own journey as an entrepreneur. For people listening in and they're just getting started, what would you tell them? You know what? Just go this way. Don't go that other way, or take this little motto or something. What was that one piece of advice you would give someone?
Yeah, I think when I look back on my biggest regrets to where we are now, my major regret is that I didn't get started years before I did. I had this concept from about 2020 onwards, and I had a suspicion, so that gut feel that I was talking about, that this problem existed, but I didn't start validating it until the end of 2022 really. And I think my advice, and for some reason I found it very hard to see it myself when I was going through it, but it's not like this nebulous fog of things to do. There are a series of steps that it takes to, come up with a concept, to market test that concept, to take that concept to investors, to fundraise, to get your first customers, to build out a platform, all the way to where we are now. where we're starting to look at, right, okay, what's the, how can we sort our unit economics out? What do they look like? Those kind of scale up questions. And I think it's important that people remember that. And if they don't take that first step, which for me was validating an idea that I had, you need to have an idea, but sometimes ideas just come from talking to other people about their problems, then you've got no right to complain that you're not where you want to be. And I spent, 7 years of my career really working jobs that were great and were enjoyable, but I knew ultimately were not me and not where I wanted to end up longer term. So I think that, again, at the risk of sounding like a life coach, because I don't mean to at all, but like that willingness to take the first step, and then to, because if you try and do too much, and this is when I first started fundraising as well, I kept reminding myself of this. Like if I looked too far ahead, I would freak out and get demotivated, because I couldn't see how do you build $100 million company or dollar company? How can you hit these milestones? How can we get these people on board? And those are completely the wrong questions to ask. It is a series of baby steps, but you just have to constantly make sure that you're doing something every day that's going to move you forwards. Otherwise, you're going to remain in the same place where you were and where ultimately I did at different companies for much longer than I would have liked to. I think if I was to, put together a perfect life plan or whatever.
There was a good book on small incremental changes. I think it's called 1%, and it's from one of the coaches, and I could be completely wrong here, that helped Team GB win so many gold medals on the Olympics in London in 2012. And it's just about improving that 1%. And you keep on improving 1%, and then the next round 1%. And as you add all these 1% up, you actually improve quite a lot. Instead of just trying, because a lot of people try to focus, how can I improve 20% of my life? Well, you can't. But you can improve 1%. So just wake up, I don't know, half an hour earlier and go to the gym, something. And that thing does add up after a while.
Yeah.
So it's quite impactful. I was just wondering, what's next for your company? I mean, are you guys raising? What's the next? Do you want to shout out to investors? Hey guys, company.
Maybe. So it's an interesting one, because we are cash flow positive, which is great. So we're in a position where we don't need to raise, but ultimately we believe there's an opportunity here to become the go-to solution for wine investment. Almost synonymous with wine investment in the same way that Vanguard is synonymous with index funds. When you think about, where am I going to get my S&P 500 tracker? You think, Vanguard, straight away. At least if you're a huge nerd that works in finance, like that's what you think. I'm sure most normal people don't immediately associate the two. And I think to do that, it would probably be sensible to raise more capital in some shape or form. We're seeing a lot of interest, which is really encouraging. I think largely because we are building in public. So, I hope I haven't come across as overly candid in this podcast so far, but I want to build a very transparent, authentic business, because I think that resonates with people in this day and age. And I have been doing that publicly on LinkedIn. Our Chief Commercial Officer, Johnny Keeling, has been doing that publicly on LinkedIn. And we've been telling our story as we've been building in real time. And I think people have been able to see the progress that we're making. And as a result, I would hope that we are in a good position. Maybe not now. I think there's a few milestones that I would like to hit first, and actually a few assumptions still left to prove, before running into just raising a seed round for no reason. But then I suspect we will be raising it at some point.
Interesting. Yeah. Let me know, because it sounds very
thank you.
So if people want to reach out to you, taking along what we're talking about, how can they do so?
Sure. So you can drop me an email. I'm Callum, that's CALLUM @winefi.co. Or I'm on LinkedIn pretty much every day. So maybe it was best to put my LinkedIn handle in the description, but I'm Callum Woodcock on LinkedIn. I'm not under a pseudonym. And I love to receive messages on both platforms. So if anyone wants to reach out, even just to have a chat and find out a little bit more about what we're doing, please feel free. We're always interested in meeting new people.
Sounds good. Callum, thank you so much for your time. It's been absolutely
Thank you, Ricardo. No, real pleasure to have you on. Thank you.
Thank you. Hold on. I'm just clicking stop.